Bob Iger has officially returned as the CEO of the Walt Disney Company, but that's come with some questions and turmoil. What other major changes have already started happening since Iger's retirement from retirement? And what challenges will he have to face leading into the new year? Let's take a deeper dive into those facts today here on DFB Guide. Hey everybody, it's AJ for Disney Food Blog. Today's video is going to take an extensive look into what's currently happening with Disney's big leadership shakeup. So just to give you a quick roadmap of what that's going to look like, we're going to start with why Bob Iger took over Bob Chapek's role as CEO in the first place, what recent changes we're already starting to see, what changes we're likely going to see in the future, and what things are probably going to stay exactly the way they are. So let's take it from the top. What actually happened? A big opening question here. What led to Bob Chapek having to step down from his role as Disney's CEO and Bob Iger needing to return to bat in the midst of his retirement? After all, earlier in 2022, Disney's board of directors had already voted to extend Chapek's contract for 3 more years, so why the sudden switch? Though some may have different opinions regarding this replacement, it really all boils down to one major thing: money. Disney reported $1.5 billion in quarterly losses, and revenues missed expectations for their streaming services. Now, losses in a company aren't abnormal, but what gave the board reason for concern was the consistency of these losses and how quickly they were starting to plummet. Just a year earlier, Disney's streaming services were down $630 million, and the jump up to $1.5 billion was more than worrisome, especially with shareholders. This loss didn't just reflect a drop in Disney Plus, it reflected a drop in other Disney streaming services too, including their partnership with Hulu and ESPN Plus. The interesting thing about these numbers coming to light during that Q4 earnings call was the way Chapek directed attention elsewhere, pointing fingers toward their number of direct-to-consumer subscribers as a mark of success. But even with Chapek's positive outlook on the future of the streaming service by 2024, he still implemented a strategy to cut costs, which included hiring freezes and potential layoffs. He relayed this to senior staff via an email on Veterans Day, and that email seemed to be the final straw for Disney's board members. Stocks were plummeting, restrictions were being put in place for cast members, streaming services were losing billions, and with Chapek's already rocky past with several important figures like Scarlett Johansson over her compensation for the Black Widow film and the Florida government controversies, which we'll talk more about later on, the climate of the company, especially in light of an approaching recession, was no longer something the board wanted to gamble on. They needed to make a change, and they needed it immediately. The board made a seemingly sudden decision to have Chapek step down on Sunday night, November 20th. Though Chapek learned about his fate with the company on the same day we all did, Iger had already been contacted by the board the previous Friday. In Disney's full statement regarding this change, they noted that Iger had signed a 2-year contract. During this time, Iger will work alongside the board to not just help the Walt Disney Company manage some major financial losses, but also find a suitable successor that can become a better long-term fit for Disney. So, has anything changed yet? Well, Bob Iger had barely settled back into the company before the theme park fan masses came in with their questions. All those questions could be boiled down to this: what's Iger gonna do now? Will the parks become less expensive? Will certain experiences be reinstated again in the wake of his return? Before we can address those questions, let's look at what's already happened since Iger reclaimed his CEO title. Although he hasn't been back long, things are still shifting inside the Disney company as we speak. Bob Chapek wasn't the only person who left the Disney Company. 2 other executives also departed shortly after. The first was Kareem Daniel, who was formerly Disney's head of media and entertainment. According to The Hollywood Reporter, Daniel was considered to be a top lieutenant for Chapek, who had originally appointed Daniel into this Disney media and entertainment leadership role back in 2020. The very day after Iger returned as CEO, he sent a message company-wide explaining the decision behind Daniel's departure. I've asked Dana Walden, chairman of Disney General Entertainment Content, Alan Bergman, chairman of Disney Studios Content, Jimmy Pitaro, president of ESPN Inc., and Christine McCarthy, chief financial officer of the Walt Disney Company, to work together on the design of a new structure that puts more decision-making back in the hands of our creative teams and rationalizes costs. And this will necessitate a reorganization of Disney media and entertainment distribution. As a result, Kareem Daniel will be leaving the company, and I hope you will all join me in thanking him for his many years of service to Disney. The second executive who left the company shortly after Chapek did was Arthur Bachner, Chapek's vice president of strategic communications and lead speechwriter. Bachner served in this position during the time Chapek was responding to Florida's Parental Rights and Education Bill, a bill which was signed into law earlier this year. Again, we'll get more into why Disney's involvement with Florida politics is something currently being addressed by Iger, since the situation has created quite the rift between the Disney company and the Florida government. He was also behind the comments Chapek used as a response toward the recent $1.5 billion loss, which revealed the company's plans to increase layoffs and hiring freezes. Bachner left the company on November 26th, only 6 days after Chapek's departure. Next, let's take a look at the stock price roller coaster that Disney has been experiencing the past couple of years. Stock prices reflect and can alternately influence the trust the market has in a company's profitability and potential for stability. So they're a good aggregate depiction of how various stakeholders, investors, analysts, and even fans could be viewing the current and future performance of that company. Disney stocks had several periods of strength during Chapek's time as CEO. After the historic 2020 park closures due to the pandemic, which severely impacted perceived stability, Disney's relatively quick recuperation caused stock prices to climb into some record highs, and in 2021 was even trading up to $154 plus, hitting its peak around $197 on March 12, 2021. But the stock value started to see a major drop-off in price by the end of Chapek's time in the company. These values started dropping significantly after the Q4 earnings call when the $1.5 billion in DTC losses was revealed. But why did streaming services take such a hit? According to the call, Disney Plus experienced higher programming and production costs and increases in marketing and technology costs. It was also missing any Premier Access releases in the current quarter. The decrease in results at Hulu was due to higher programming and production and marketing costs, quote unquote, as well. Chapek did mention that Disney Plus price increases, as well as the ad-supported tier system put in place on December 8th, should help the streaming service back on a path to achieve profitable streaming business. But Chapek also mentioned that this profit more than likely wouldn't be seen until 2024, assuming there isn't a shift in the economic climate. UBS analysts predicted that this means the company could potentially be in the hole by $3.3 billion by the end of the 2023 fiscal year. Before Iger's return, stock for the Walt Disney Company closed at $91.80 on November 18th, but on the day after Iger's return to the company, stock was trading at $100 plus in the pre-market. Just because Iger's taken over again doesn't mean stock prices have automatically been fixed by any means. The trade costs crept downwards again shortly after the excitement of the CEO switch-up died down, and that means Iger's got a lot of work to do to restabilize the market's trust in Disney's future. One of Chapek's final statements as CEO in regard to the $1.5 billion hit the Disney company took during this previous quarterly report was that Disney would be implementing hiring freezes and layoffs to help cut the costs. So what is Iger doing about that? Well, he did mention shortly after his return that the hiring freeze will stay in place for now. For how long? It's uncertain, but Disney's been playing this back and forth game of hiring freeze tags since the start of the pandemic as a way to save the company money. And now that a recession is looming on the horizon for 2023, many companies, including Disney, are making massive cutbacks. But keep in mind that Iger hasn't been back as CEO for too terribly long, and many matters regarding the future of the company are still being discussed. And this leads me to the next big question: what challenges is he gonna face as CEO? Many guests and cast members and investors were thrilled to hear about Iger's prodigal return, but a lot of that excitement came with an expectation that the Disney parks would basically revert back to what they were in 2019, that unpopular changes and updates would be rolled back. But here's the truth of it all. Disney's not in a tight spot financially because of their parks. In fact, one of the main reasons Disney's able to pay their bills at all is because of the parks. We talked about this in detail in our Can Disney Keep Raising Prices video a few weeks ago. The parks made $7.4 billion in the fourth quarter of 2022. Which is up 36% from the fourth quarter of 2021, and is responsible for about 62% of the operating capital of the company. Nope, parks aren't the problem. Disney is struggling with Disney Plus revenue. According to Disney's earnings report for Q3 of fiscal year 2022, their entire direct-to-consumer side, which includes ESPN Plus and Hulu, had a loss of $1.061 billion for the quarter that ended on July 2nd, 2022. That's compared to a loss of just $293 million for the same quarter in 2021. And the numbers don't show improvement in that Q4 earnings call. Operating loss for direct-to-consumer streaming services increased to $1.5 billion. Iger's original expertise is in digital media, not park management, and it's likely that his primary focus is going to be making this Disney Plus investment work a little better than it has been. You gotta put the band-aid where you're bleeding the most. But how different will Iger's approach to Disney Plus be as opposed to what Chapek's approach had been? Well, probably a lot. According to CNBC, Iger wanted Disney Plus to be the lowest-priced major streaming offering. That way, customers would view Disney Plus as a stronger value proposition to its competitors, even if they felt other services' content might be more robust. Iger's idea was to slowly raise prices over time, targeting a $1 per month increase each year for the near future. On December 8th, Disney Plus had another price increase and also introduced an ad-based tier system, a strategy formulated while Chapek was with the company. So what Iger plans on doing next to help boost interest and sales is something investors and the board of directors are eager to see. And that's probably his biggest challenge, but don't worry, there's lots more. That said, what is Iger likely to leave unchanged? Another big challenge? is Reedy Creek. Let's bring things back around to the big Disney Company versus Florida government controversy that started earlier this year. Quick recap for you in case you've missed out on what's been happening behind the scenes. During Bob Chapek's time as CEO, Disney made comments in direct opposition to Florida's parental rights and education law, indicating that the law shouldn't have been passed and that Disney would work for its repeal. Following this, in what many have seen as an act of retaliation, Florida Governor Ron DeSantis and the Florida legislature signed a bill that will dissolve Disney's Reedy Creek Improvement District by June 2023. Now, Reedy Creek is an exclusive taxing district that Disney has operated under since 1967. This gives Disney the ability to control things like its own fire department, special taxing laws, and more power over the land and what's built on it. Basically, Walt set this up to help fund the building of Walt Disney World. Many have wondered if Iger would be able to smooth things over with the Florida government and potentially have the dissolution overturned. After all, Iger had openly admitted in a Fox News interview with Tucker Carlson that he regretted Disney ever got into this political fight with Florida Governor DeSantis, and Iger hoped instead that the company would be able to remove themselves from the controversial spotlight altogether instead of continuing to be dragged into that battle. But DeSantis retaliated Iger's remarks, saying Florida didn't drag Disney into any issues, but rather they brought this on themselves. The future of Reedy Creek remains hazy, but Iger is well known for his diplomacy and charisma, two things Bob Chapek wasn't as skillful with. All right, so let's move on to the parks, right? What is Iger gonna leave unchanged, and where might we see some major changes? Let's start with what he's probably not gonna touch. A lot of what was put into place during Chapek's term was initiated and planned out during Iger's. That includes Disney Plus and Disney Genie. Remember how Disney Genie was originally introduced during the D23 Expo in 2019 before any of this happened? Yeah, a lot of Disney Genie, including its premium services, Genie Plus and individual lightning lanes, were conceptualized before Chapek became CEO. And the changes that have been implemented over the past 2 years with this pay-to-skip-the-line system are making Disney a lot of money. Disney's CFO has publicly credited guest spending on Genie Plus premium offerings as a major driver of the increase in park revenue. So the likelihood that the Genie Plus Golden Goose will be rolled back is slim. But let's talk about park pass reservations. Disney originally implemented the park pass reservation system back in 2020 when the parks were starting to reopen. Requiring guests to reserve their spot in a park meant Disney could manage crowd levels and keep the numbers at a reasonable capacity that could still allow for social distancing measures to take place. But fast forward to today, and park pass reservation requirements are still intact, even though social distancing isn't a thing anymore. When Iger was asked during a cast member town hall about this stance on park passes, he noted that he hadn't used them yet and would ask Josh D'Amaro, head of Disney Parks Experiences and Products, about them. So that's essentially him saying no comment. And while I could see this requirement being rolled back before I could see Genie Plus being dismantled, it's definitely not to Disney's benefit to do so. Knowing exactly how many people plan to enter a specific park on a certain day allows Disney to gather reams of data, spread out visitors, and create a game plan for how much staffing, food, and merchandise should be in each park on each day. The system also allows Disney to control who exactly gets to visit the parks on certain days. I go in greater depth about this controversial topic in our Truth About Annual Passes video, but in short, certain guests are more profitable to Disney than others. For example, out-of-town visitors are apt to spend more and make the parks more money than, say, a local with an annual pass. By separating park pass calendar availability into 3 different tiers for annual pass holders, hotel guests, and regular ticket holders, Disney can ensure park availability is higher for the more profitable guests, if needed, and fill in gaps with pass holders. Iger hasn't said much about the park pass system yet, so its fate is still uncertain. But if he axes it, we can assume it's purely for brand lift reasons. That data is too valuable to Disney to nix for any other reason. So what could potentially change now that Iger is back in the hot seat? There could be more magic making among staff. Like I mentioned earlier, Chapek didn't really make the best impressions with everyone, and that went for cast members too. During the parental rights and education law controversies, Chapek's initial response to the bill, which was basically not saying a whole lot of anything since, as he noted, corporate statements do very little to change outcomes or minds, many cast members participated in walkouts in protest of Disney's handling of the situation. So if the rift between Chapek and cast members was affecting their ability to do their jobs in the parks, that tension could lessen with Iger back in charge. There could also be a big look over here announcement. Fans are expecting something big from Iger. It's like that scene in The Incredibles when Mr. Incredible asks the kid on the trike, well, what are you waiting for? And the kid responds with, I don't know, something amazing, I guess. That's Disney fans right now. They're just waiting for something amazing to take place, so Disney might just throw them a bone by announcing or releasing something that's already been in the works. A new attraction, an opening date, the opening of a restaurant that's been on the horizon for years. Anything to take the focus off of changes that aren't gonna happen. Could this also be the time when we see the Disney dining plan make its miraculous return? The long-awaited return of the dining plan, which allowed Disney World guests to purchase a package for meals and snacks along with the rest of their vacation, is still lingering in the void. Disney confirmed last year that it would be coming back, and with nearly all of its dining locations back open, we have no reason to believe it won't be coming back, so perhaps this is the bone Disney's planning on throwing out at some point. And although there may not be a removal of surge prices, we could see them maybe slowing down. If different leadership results in more investor confidence and in big moves toward profitability with Disney streaming services, it could reduce pressure on the parks division, and maybe that train will slow down. But again, as long as there is so much demand and so many people willing to pay higher prices to visit, there's no business case for Disney to curtail its price increases and surge pricing. So, will prices stop increasing? This is another thing that people are asking in droves. Not too terribly long ago, we did that video called Can Disney World Keep Raising Prices, which I recommend you go check out after we wrap up here today because I'm super proud of it. At the time we created the script, Bob Chapek was still Disney's CEO. But even with Bob Iger's return, many of the same concepts are still ringing true. Because it doesn't matter who's CEO of the company, prices will continue to be impacted by demand, inflation, historical events like pandemics or recessions or global conflicts, and potential food and product shortages. The same thing goes for surge pricing, which impacts Disney vacation purchases like park tickets, park hoppers, hotel stays, airport transportation, and Genie Plus and individual lightning lanes. All in all, we're not holding our breath for prices to suddenly drop in the wake of Iger's return. Nothing he can do will take us back to 2019. But that's it in a nutshell. Again, there's a lot more detail in that video about Can Disney World Keep Raising Prices, and it's really interesting stuff. You should go check it out. And finally, can he live up to expectations? He is under a lot of pressure. The guy is basically being touted as a savior. He's stepped into a packed out minefield, and this job will require a juggling act of improving brand perception, regaining investor approval, pulling Disney Plus out of its billion-dollar hole, political diplomacy, and about 1,000 other expectations, all while managing the company through what's predicted to be a significant recession in 2023. And just because Iger's proven to be a successful CEO in the past doesn't mean he's guaranteed to lead this company to a for-sure victory the second time around. The experience of other so-called boomerang CEOs shows that once successful leaders might stumble the second time around, with one study finding that companies that bring back CEOs do worse than those that bring in someone new. And in a study published in the 2020 MIT Sloan Management Review, companies that brought back a former CEO had significantly lower stock performance than those that put someone new in the position. Iger is optimistic for the future of the company, but analysts so far have mixed response. Wells Fargo's Stephen Cahill said that investors would see this change as a clear positive. But then there are those who doubt this major change, like media analyst at Cowen Doug Kreutz, who stated, Disney's problems are more structural than they are related to who's running the company. I don't think there's any magic wand that Bob Iger can wave to change that. But let's not forget, this CEO change is meant to be temporary. During this time, Bob Iger and the Disney company will be searching for a long-term successor. So are there any potential candidates so far? Currently, it seems Chief Financial Officer Christine McCarthy is a leading contender for the role. McCarthy has been recognized by the Disney company as a big asset during pandemic times. She was influential in helping to successfully engineer a string of key mergers and adept at raising and husbanding cash through the depth of COVID. That's a quote. She also was one of the driving forces that led to Chapek's sudden replacement. McCarthy went to board chairperson Susan Arnold and threatened to resign if Chapek was not cut loose immediately, quote unquote. If McCarthy did become Disney CEO, she would be the first female to do so in the history of the Walt Disney Company. Disney General Entertainment Content Chair Dana Walden also seems to currently be in the running for CEO, and with both Walden and McCarthy having been placed at the helm of restructuring Disney Plus, this could be the ultimate test to see who proves themselves worthy of taking over as the next CEO, but only time will tell. Now, y'all know who will always be here to help you save money at Disney, as well as give you all the honest reviews for rides and restaurants and add-on experiences? We will. The DFB team. So make sure to sign up for our newsletter, which I'll link in the description below, to receive all the latest Disney news updates, like, say, a major CEO change, right in your inbox for free. Thanks for listening, everyone, and thanks for watching. As always, this is AJ for Disney Food Blog, and we'll see you real soon.